Hey everybody, thank you for tuning in. The question we're trying to answer in this video is Pinterest a strong company and can you buy them right now at a good valuation? Let's find out. To answer that question, I'm going to score it using my Stockman Investing scorecard, and we'll also look at the valuation by using the discounted cash flow method. So first of all, what does Pinterest do? Pinterest operates as a visual discovery engine, which basically means they help people to find inspiration for their lives, including recipes, style, and home inspiration. People use Pinterest when they want something new, but don't have a specific idea in mind, and it guides people to the ideas that are just right for them. For example, as you can see here, finding inspiration for wedding, recipes, haircuts, things that have been looked for in the past. They used to do this solely by the so-called pins, but they've also moved to providing short videos. Next to that, Pinterest also provides product and idea pins. The machine learning works in a way that it will provide recommendations based on the pin's taste and interest, but makes it over time all the inspiration and ideas should be relevant to the user. So how does Pinterest make money of that? Well, Pinterest makes its money via advertising, specifically their promoted pins. These promoted pins are ads that look similar to user-generated pins, but are paid advertisements. Now, for Pinterest to provide you with relevant advertisements, they do not need to track your online activity, but they can just tailor them to your saved pins and searches on Pinterest. So they're also not impacted that much or at all by Apple's increasing privacy steps, where iOS users have the option to block the IDFA, identifier for advertisers, which is impacting companies like Meta and Snap and other advertisement companies a lot more. Next to that, also Google announced similar privacy steps to Apple last week, which makes it even more valuable for Pinterest that they're not affected by that much. The second way Pinterest generates revenue is by the relatively new function where Pinterest has integrated a buy it button, which permits users to buy pinned products directly from Pinterest, rather than visiting a separate merchant site. I believe that so far this option is only available in the US, so hopefully this will quickly be implemented globally. And there are a lot of opportunities for increasing revenue that Pinterest plans to pursue, such as including greater international expansion, which they're already doing by expanding to Japan and 3 new countries in Latin America, focusing more on video and increasing ad capabilities like VR and AR, as well as pursuing its own e-commerce efforts. Given that users of Pinterest are overwhelmingly female and have above average incomes, using its platform as an e-commerce gateway is more than ideal. Let's have a look at how Pinterest is performing on the stock market. Their IPO in May 2019 was at a price of $19, and in the months after, they almost surged 100% to a top of $37, before declining to the IPO level again, and after COVID hit, they even decreased to an intraday low of around $10. So kudos to everyone who picked it up at these levels. When everyone was locked at home and spending a lot more time online, Pinterest as a company, but definitely also the stock price, benefited a lot, with even an intraday high of $89.19 in February, so almost 9x in less than a year. We'll have a look later if that price made any sense, but for the people who managed to sell these levels, well done. After that top, Pinterest started to decline, which has been going on for almost a year now, with a decline of around 70%. So pretty crazy price movement since its IPO, if you ask me. Here you can see the price to sales ratio and the total enterprise value to revenue ratio, which are almost the same since Pinterest does not have a lot of debt. At the March low, due to COVID, it reached a price to sales multiple of 4.1, which has been the absolute low since the IPO. And I think everybody agrees that almost everything was way oversold during all the COVID panic selling in March. However, right now, Pinterest has evolved a lot as a company, but the multiples are now getting close to the same levels as in March, with a price to sales multiple of around 5. So that seems as a good buying opportunity, but if we look at the total enterprise value to Ebitda multiple, which stands for earnings before interest, taxes, depreciation, and amortization, it's currently around a multiple of 20, which is still not that cheap. But since 2021 was the first profitable year of Pinterest, there's a lot of operating leverage ahead. So if the stock price will stay at these levels, the multiple will decrease quickly. And for the market cap to free cash flow multiple counts the same. Currently at the multiple of around 33, which is definitely not cheap, but the free cash flow should increase a lot over the next years, which we'll have a look at with the discounted cash flow valuation later. Now let's have a look at Pinterest's latest earnings report. On February 3rd, Pinterest released its Q4 and full 2021 result. Let's have a look at how they delivered. All eyes were on Pinterest Q4 results after the crash of Meta stock of 25% a day before the release of Pinterest numbers, and the poor stock performance of Pinterest and some negative headlines like the turnover of a number of high-level executives. These three things created the perfect storm to drive sentiment to very negative territory. However, the results were not bad, and the company continues to execute on its new creator strategy. First of all, Pinterest beat both the top and bottom lines. Q4 revenue came in at $847 million, which is a 20% year-over-year growth, beating estimates by 2.4%. The earnings per share came in at 49 cents, beating estimates by 9%, so delivering strong on both metrics. The yearly results were good. Pinterest showed continued strength on the top and bottom lines. Full year 2021 revenue came in at $2.58 billion, which is a 52% year-over-year growth, with international revenue as the highlight once again. Total revenue is still mostly made up of domestic, 78%, but international continues to gain share at a quick pace. Full year 2021 net income came in at $360 million, compared to a loss of $128 million in 2020, the first ever positive net income full year, so that's always welcome news as an investor. These strong results continue to be driven by strong ARPU, average revenue per user. International ARPU grew 62% to 57 cents, and domestic ARPU grew an impressive 25% to $7.43. As 80% of Pinterest users are international, global ARPU came in at $1.93, a 23% year-over-year growth. International ARPU lags domestic because the company started monetizing in the US much sooner than in international markets, and of course also because the US is a market with a lot of highly paid for ads. However, international markets are gaining traction. As they mentioned in a shareholder letter, we continue to build our sales coverage, expand our advertiser base, increase our shoppable content, and execute on our strategy to provide relevant ads to our users in regions outside of the US. For the fun of it, let's have a look at the ARPU of Meta. And I know you cannot really compare that because Meta has a lot of daily active users and also a lot of users in general. But still it shows that for the international ARPU from Pinterest of currently $1.93, there's a lot of room left to grow. The advertising market is currently much more developed in the US than in international markets, but the potential is enormous if you think that international ARPU will eventually grow in the direction of where the domestic ARPU is now. And then the metric that was one of the reasons that stock price of Pinterest got beaten down a lot, the monthly active users. The global MAUs came in at 431 million in Q4, a sequential decline of 3% and a year-over-year decline of 6%. The decline was mainly driven by domestic users, minus 12% year-over-year, but it's also a difficult comparison because in Q4 2020, almost all the markets where Pinterest are active were in a complete lockdown, and also management explained that a big chunk of the decline in MAUs continues to be caused by desktop users. And maybe the most important news was mentioned by Todd Morgenfeld during the earnings call. As of Tuesday, February 1st, US monthly active users were approximately 86.6 million, and global monthly active users were approximately 436.8 million. On the revenue side, we expect Q1 revenue to grow on the high teens on a percentage base year over year. This shows an increase in the US and global MAUs since the end of Q4. This is more important than you might think, as the holiday season is typically the period with the highest engagement. So seeing MAUs in February up with respect to the holiday season is a great sign. It is still too soon to judge if this is the bottom or just a temporary pop in MAUs, but the signs definitely look good. Now let's start with the fun part of this video, giving Pinterest a score using the Stock 1 Investing Scorecard. The scorecard contains of 5 sections: financials, culture, mode, potential, and risk. Total score you can get 120, and then we change that to a percentage score. And now first, the depth of Pinterest. Pinterest has a depth of 250 million, which is not bad for a company the size of Pinterest. and they have a total debt to equity ratio of 8.3%. So that gives them 8 points on the scorecard for the debt section. If we look at the current ratio for Pinterest is 12.25, which means that they can pay over 12 times the current liabilities. So that gives them 3 points. Then let's have a look at the return on invested capital, which is the most important section of the financials part, with the maximum of 12 points. And Pinterest scores an 11.4% return on invested capital. If you look at the quarterly numbers, they even managed to get 27.7% return on invested capital in the last quarter, and also in the quarter before they're performing well. But let's stick to the annual one, 11.4, which gives them 8 points out of 12, which is definitely not bad. The direction of the return on invested capital is growing, 2 points. Then let's have a look if Pinterest is free cash flow positive. They are free cash flow positive, get 2 points. The free cash flow percentage of Ebitda, as you can see here, the Ebitda for 21 was 840 million. Free cash flow was 743, so that's definitely more than 75%. Also maximum points here, 3 points. Then the capital expenditure percentage of the free cash flow. The capex of Pinterest was 9 million. And that compared to the free cash flow of Pinterest, that's not even 2%. So that's great. Also maximum points here, 3. I give Pinterest a total of 29 points for the financial section, which is actually really great. They only missed 4 points for the return on invested capital part. And it looks like they're going to be able to get a return on invested capital of more than 15% this year. The next section is the management culture section. CEO experience and track record. The CEO of Pinterest is Ben Silbermann. He's the founder of Pinterest, so gonna get full points here. I trust the CEO to act with integrity. Almost always this is 0 points. But sometimes there's a CEO who has worked at a different company, who has done things that are a little bit questionable, or you have watched interviews and you think this person is not completely trustworthy, then I would give minus points. But in this case, I trust Ben Silbermann completely, and I'm not going to deduct any points. The CEO pay compensation is reasonable and based on long-term success. So let's have a look at what Ben Silbermann is earning. So first of all, his base salary is less than 200,000, which is a lot less than what Todd is earning, the CFO, and also what the Senior Vice President of Product is earning. So that looks like he's earning a reasonable salary. This is actually a very low base salary for a CEO. Then if you look at stock-based compensation, in 2013, he received 7.5 million shares, which at the high point was worth almost 700 million. So you could think that it's very excessive, but yes and no. So he already received it in 2013 with an exercise price of $3.13. But since it happened so long ago, back then Pinterest was also worth around $3. So it was really based on long-term success. Now, as I mentioned, at the high point, it was worth 700 million. With the current stock price as a value of around 170 million. However, if we look, we can see here that Ben Silbermann already exercised for almost 230 million, which is a crazy number if you think about it. And the next thing, he also, together with Evan Sharp, they both received 2.3 million restricted stock units, which is basically the same as this here, in March 2019, so it's related to the IPO. With the IPO price of 19, this is again another 45 million. So this, in my point of view, is not really based on long-term success, and it's a lot of money. But that being said, there is no other stock-based compensation that I could find, and his base salary is still low. So I'm going to score it in the middle with 0 points. Then skin in the game percentage of ownership, Ben Silverman still owns around 38% of the company, so that is definitely a lot of skin in the game. I get full points. The management rating, recommend to a friend, 84%, appreciates director, 88%, and overall score 4.2. So full points here, 7 points. The mission statement, let's have a look at the mission. The mission of Pinterest is, our mission is to bring everyone the inspiration to create a life they love. Also here you can see the mission. Our mission is to bring everyone the inspiration to create a life they love. Now, perfect. I would say that is simple. Yeah, definitely. Is it inspirational? Yes, also. You can really use it to make decisions that are really focused on the users of Pinterest. And also provide optionality. Yes, also. You can go a lot of different directions with that mission. So I'm going to give it full points, 4 points. Then insider buying and guru buying. Well, none of the gurus own Pinterest, so that definitely means that the gurus that I follow are not owning it. And if you look at insider transaction, you can see that it is only being sold from both Even Sharp as well as Benjamin Silverman. Small amounts for somebody who owns billions in a company, but still, there's no insider buying at all. So 0 points. So that gives it 23 points for the management culture section, which is a little bit in the middle. The maximum score you can get is 31, but that is the beauty of a scorecard. You could argue that for the CEO pay compensation, that you should give the maximum points, and also for the insider buying, guru buying, you might not find that important. The next section is the mode of Pinterest. Do I think that Pinterest has a product ecosystem? No, I wouldn't give them any points for that, but do I think they have a network effect? Yes, definitely. It's not as strong as, for instance, for companies as Meta, where more use of the app also relates to more content, which generates more users, which then generates more content again, and so on. In Pinterest, there's a lot of people who are on the app but don't create any content, but there is a network effect on the creator side. More creators generate more content, which increases the quality of content on Pinterest, which attracts more users, and more users then attract more creators again, which then increase the quality of the content again. This effect will become even stronger now that Pinterest decided to incentivize the creators even more. So creators on Pinterest have ability to make more money, which will only increase this network effect. I'm giving them 7 points. Now for the switching cost. I think for the use of Pinterest, there's a little switching cost. I mean, over time you have created your own boards, you saved tens of hundreds of pins. So it would be a little bit of work to create the same on a different platform, but that's a very weak switching cost. For the creators, it's a little bit stronger. You have your followers here on Pinterest who might not follow you on other platforms. So if you decided to stop using Pinterest and move to other platforms, you'll reach a lot less people and therefore generate a lot less money. But since this mode is not that strong, I want to give it 3 points. I do think that Pinterest has some durable cost advantage. Not about the vertical integration, physical location, or distribution, but to the skill, they definitely have some kind of mode. For new companies to start and do the same as Pinterest is doing, they would have way too much cost. And if you can see also the numbers of Pinterest, their gross margin is increasing every year. So even if you try to copy what they're doing, it would cost you a lot. And at the same time, Pinterest is making a lot of money. So they can use that to spend more on marketing, better content, superior user experiences, more experienced people, and even be less efficient and still beat you. The only one who can do that are big tech, but even then it's not that easy to copy what Pinterest has. So for that reason, I'm not going to give them full points, but I'm going to give them 5. For intangibles, I'm going to give them full points, basically because they're a premium brand. And a lot of people directly turn to Pinterest when they're looking for inspiration. Now for the counter position, I'm giving them 1 point. And that's more because Pinterest's business model is all about positivity and creating a good feeling. While a lot of the other platforms benefit from negativity and conflict, so they would definitely be harmed if they would adapt that part of Pinterest's business model. But since it is really, really weak, I'm only going to give 1 point. And for current resource, 0 points. Which brings the total of the mode score to 26, which is actually a really good score for mode. I mean, the current resource is almost never there, and also rarely that the company scores on all of the mode sections. So 26 is a good score. For the potential section, we look at the optionality, and as already discussed in the first part of the video, are so many directions that Pinterest can focus on, especially with the amount of almost 450 million monthly average users. They have a lot of optionality, so I'm going to give them full points for that. Then have a look at the risk session. Do they have customer concentration? No, they do not. 0 points. Industry disruption? Also none. And a binary event, well, losing a patent or legal ruling? Also not. Which gave Pinterest a total of 84 points and a score of 82, which is a great score, definitely within my investing range. That answers the first part of the question. If Pinterest is a strong company, well, they definitely are. Let's have a look at the second part of the question, if you can also buy them at a good valuation. For the valuation, we're going to use the discounted cash flow method. I already filled out the historical and the future information, but I'm going to talk you through the assumptions that I used to get to these numbers. So first of all, for revenue, you can see that historically it's been growing with an average of 52%. So you could argue that you should use a higher growth rate for the future, but they mentioned in the earnings call that they will grow for the Q1 in the high teens. So a growth rate in the mid-20s is more accurate, and it's also more in line with analyst expectations. However, I do think that these expectations are quite conservative, and that if Pinterest manage to execute on their e-commerce in the future, that these numbers should definitely be a lot higher than they are right now. And the current expectations are already feasible if Pinterest just executes on the advertisement strategy. The gross profit has been increasing every year. Only in 2019, the increase in gross profit margin was very little, which is related to the IPO, with an average of a little bit above 70% and almost 80% in the previous year. So going forward, the gross profit would also increase like it did in the past, but due to the law of large numbers, and also because I prefer to be a little bit conservative in my discounted cash flow models, I'm having it slowly increase from 80 to 84.50 in after 10 years. The selling, general and administrative and marketing costs have been declining as a percentage of the revenue over the years, except for 2019, but that is again IPO related. The average is a little bit above 50%, and in 2021, previous year, it was as low as 36.5%. So this is a trend that will continue over the years. For next year, I have it almost the same as last year, and it will decline to 22.5% of the revenue in 2031. Most likely it's going to be a lot lower because that's still going to be over 3 billion in selling, general and administrative and marketing costs. But again, I like to be conservative, so we will monitor it over the years to see if that's most likely will be a lot lower. The resource and development cost as a percentage of the revenue have also been declining over the years, with an average of around 50. Again, because of 2019, with IPO related, there was a lot of cost, but this is a trend that I also see decline over the years. Not as strong as it has been in the past, because Pinterest announced that they're going to invest a lot more in R&D going forward. So at some point it will also surpass the selling and marketing cost. Last year was the first year that Pinterest had a positive Ebitda year with a margin of 15.6%. So the average doesn't really mean anything here. But going forward, I think this year the margin will be a little bit lower than last year due to the increased cost for creators. But going forward, the Ebitda margin should increase all the way from 15.10 this year to over 36 in 2031. For the free cash flow, Pinterest has been cash flow positive in the previous 2 years. And going forward, It's going to be at around the 90% of the Ebitda. It's going to go all the way from 431 this year to close to 5 billion in 2031. The shares outstanding have increased a lot in 2019 related to the IPO. And also the previous 2 years, there has been quite some additional shares, which is not uncommon for a company that just had their IPO. Going forward, I have it an increase with 3%, which means that in 10 years, there will be around 930 million shares. Personally, I think that at some point the share amount will stop growing, mostly because Pinterest will have enough cash and a cash flow to buy back the shares that they use for stock-based compensation. The cash and cash equivalents have been growing from 83 million to 8.4 billion last year. I have to continue to grow with 15%, which means that in 10 years from now, there will be close to 5.8 billion cash. Definitely not bad. Then the total debt have been growing from 180 in 2017 to 250 million last year, which is not really a big increase, average of 11%. And this increase is mostly because of last year, the reason that it was really cheap to get debt with negative interest rates or interest rates that are close to zero. They don't really need it because they have more than enough cash. So I let the debt increase with 7% per year. But honestly, I think that when the interest rates increase, Pinterest will not take on any new debt and most likely will use the cash to pay off the debt. But again, just to be conservative, I have the debt growing with 7%, which makes it to close to 500 million debt in 10 years. The return on invested equity and the return on invested capital, both going in the right direction, both positive for the first time last year. The market cap in the last 3 years, enterprise value, share price, it gives it, last year it had a enterprise value Ebitda multiple of 61. Well, as you saw in the video, it's currently a lot less. Currently it's below 40. But for the enterprise value Ebitda multiple at the end, for the terminal value, I use a terminal value multiple of 20. This gives that the enterprise value in 2031 will be 106 billion. There's going to be close to 500 million debt, close to 6 billion in cash. It gives us a market cap in 2030 of a little above 112 billion. With the amount of shares that we have, around 930, it's going to give it a share price of 120.6, which is 5x from here. If you're going to use a discount rate of 12% and a margin of safety of 25%, which is quite a lot, but I always use a margin of safety of 25% just because we're making a lot of assumptions in a discounted cash flow model. The fair value of Pinterest right now would be 32.83, and with the current price of 26.35, which shows that Pinterest right now is clearly undervalued, and which gives us the upside to the fair value of almost 25%, which makes it definitely a buy right now. So that answers the second part of the question. Can you get in right now at a good valuation? Well, definitely yes, you can. And it also explains why I own Pinterest myself at these current levels. And with that, we came to the end of this video. I really hope you enjoyed it. It is the first video I'm releasing on this channel. So please feel free to leave any feedback next to investing in a better microphone, which I can take with me in future videos. Please press the like button if you enjoyed it, and subscribe if you're interested in seeing more videos related to the stock market. Thanks for watching, and bye for now.